The 3-day cycle is a phenomenal tool in order to identify much larger moves within the market, observing large 3-day consolidations, and using the different days of the cycle in order to identify what could happen on the next day using probabilities, templates, failed breakouts, and other aspects of this trading style. Previous day's highs and lows, who is trapped in the market, and so forth. We use day one, which is what we're going to talk about in this video, how to identify that day. Leading us into day two, looking for large trend trades, or sometimes, depending on the timing, some small reversals, and then building up into day three, finding those much larger moves after we have a large 3-day consolidation built up over time. Larger the pattern, larger the move. Before talking about trading setups, we need to find out how to find day one within the cycle. And this is the most rules-based and objective thing that we need to talk about, because if you mess this up, then you're going to be very confused about the rest of the cycle. So a new 3-day cycle can be observed when there's a failed breakout of a previous day's high or low at either the high or low of the current week. And I do have a picture of what I'm talking about up here and some examples. Monday breaks Friday high and closes back inside of Friday's range. What that's referring to is like this day right here on Monday. If Monday had closed outside of Friday's low and then pulled back up onto the inside, that would have been a day one 3-day cycle. If Tuesday breaks Monday's low or Monday's high and closes back inside of Monday's range. Why? Well, it's because Monday is the beginning of a new week. Monday is going to establish the high and the low of the current week. It is very important to understand that we're talking about within the current week. Monday's high, Monday's low. So if Tuesday closed outside on that day, which you can see that they did here, this is a breakout, and then the breakout has now failed, coming back down below Monday's high, restarting the 3-day cycle that is now day one. Another example is Wednesday, Thursday, or Friday at either the high or low of a current week. Market breaks out, similar to what has happened here on Tuesday, and closes back on the inside of the previous day's range. For example, like if over here on this Wednesday, if they would have broke above Tuesday's high and then closed back down on the inside of the range, that would restart the cycle as well, even if this had done what is done here. So like if this is closed and then gone up over here on Wednesday and then done it again, that would then restart the cycle once again, which is exactly what has happened here. So you have a Tuesday, because Tuesday in this example, Monday was a holiday and did not have a trading day. Tuesday is now the first day of the week. Tuesday has created the initial high and low of the current week. And then Wednesday trades above Tuesday's high and then closes below Tuesday's high, creating a day one of the 3-day cycle example. And on the following day, you have day two, and then you have day three. Notice how on this example here, they traded below Wednesday's low, and that breakout failed and came back on the inside. But this is why I keep on highlighting high and low of the current week. The low of the current week is all the way down here, so this is not going to restart. With the 3-day cycle, there are some particularly tricky instances in which it can be a little bit confusing, and this is one of the ones that is sometimes confusing to a lot of people. So I'm going to give you an objective way to identify it. So this is going to be finding day one over the course of 2 days, which, by the way, if you have not already, down in the description below is this slideshow. You can download it, you can save it for yourself, print it off, add it to your binder, whatever. It's yours for free, of course. Link is in the description down below. So a failed breakout over the course of 2 days. You can see where we have broke down below Friday's low on Monday, which Monday creates the initial high and low of the current week. But they did break down below Friday's low. And this is a breakout from the previous week's levels at the low of the current week, which is great. Now, on the following day, they've gone into consolidation and then came back up above this current breakout level right here from Monday. So they break out on Monday. It takes 2 days, consolidates, and then comes back up and closes above that failed breakout zone, creating a day one 3-day cycle and then day two 3-day cycle. But we don't know that that is going to occur until Tuesday finally closes. So if we're talking about 3-day setups and 3-day cycle, we won't know that this is day one and day two until Tuesday actually closes at the end of the day. Also, this dotted line, this is my daily separators, and that is indicating to me the beginning and the close of a day. So you can see that this was the end of the day. I have it highlighted. That's where it closed. So now it is a confirmed failed breakout outside of Friday and then confirming on that Tuesday. Another tricky instance is when the market begins to trend, which I'm going to have a lot more on that in later videos about the 3-day cycle within this series. However, I want to show you how to identify day 1, 2, and 3 within a trending market, because sometimes it can become confusing. And then, of course, we'll talk about how to actually use that information a bit later. So, for example, look at the days. We have Monday, Tuesday, Wednesday, Thursday, and Friday. This is the low of the current week from this week. And then Wednesday was the high of the week. And then Thursday traded above Wednesday's high. That is the high of the current week. And the breakout then failed. You can see the dotted line. They have now closed back on the inside of that weekly range. That restarts the 3-day cycle. That was day 1 of the 3-day cycle. And then we have a day 2 of the 3-day cycle on that Friday, noticing that they did not have a failed breakout at the low of the current week. So this was day 1, day 2, and then on Monday, that is now day 3 of the 3-day cycle. Except on day 3 of the 3-day cycle, there is now a breakout of Friday's high, and they close on the outside. So it's like, well, what do we do now? Do we just start counting day 4? No, absolutely not. All right, so this day 3 is going to restart the cycle because there has been no failed breakout. It's basically a failed cycle. Day 1, day 2, day 3, that day 3 becomes day 1. And on the following day will be day 2. So on the following day, day 2 of the 3-day cycle, we are now in a up moving market. And once again, Tuesday has closed as a confirmed breakout outside of Monday's high. So that is day 1. Day 2, day 3 comes after day 2. So on the next day, we get day 3 again, and then again, they close higher. So that day 3, we are now in a trending cycle of the 3-day cycle, and this day 3 is now going to become day 1 once again. And the cycle will continue to repeat until we have a failed breakout at either the high or the low of the current week. We've got some commonly asked questions up here and some questions that maybe you have. And if you have any more questions outside of these, or if you're liking this video, let me know down in the comments below. I do greatly appreciate it, and I'd be happy to answer anything that you all have. So some common questions that I get. Can a day 2 become a day 1? Yes, absolutely. If the breakout fails at the high or the low of the week on a day 2, it's going to restart the cycle. And of course, there are some very important informational pieces that go along with that, and I'm going to do that again in later videos, because if they keep doing this, where they keep breaking out over and over again and failing over and over again, that gives me a lot of information about the kind of template that we are in within that cycle and within that current week. Next question, what if the market keeps breaking out of a failed out and failed over and over again? Boy, I need to get some words out of my mouth, huh? So we have the failed breakout. If it just keeps happening over and over again, it's just going to keep restarting the cycle until that breakout does not fail. Next question. If the market breaks out at the high of the week one day and fails, and on the following day breaks out of the low and fails again, what is going to happen now? So for example, if we have a breakout like we have here, failed breakout at the low of the current week, Monday. Tuesday, breakout fails, day 1, 3-day cycle. However, on Wednesday, we get the same behavior over again. So we have day 1 on Tuesday, and then we have Wednesday performing the same behavior, but now we're doing it at the high of the week. So day 1, day 2, except now we have a failed breakout on both sides. So we have day 1 and then day 1 and then day 1. This is giving us very important information about what kind of trade setup to look for. And again, future videos. Now I keep talking about failed breakouts starting the cycle day 1, 2, and 3, but we need to define objectively what a failed breakout is in order for us to go forward. A failed breakout to me is when I do all this analysis on a 15-minute chart. Whenever they break out on a 15-minute chart and close bodies of a candle outside of the previous day's range, and of course, we're at the high and low of the week. So if we have a breakout where the bodies of the candles are closing below or above a previous day's level, that is considered a breakout. And when the day closes and closes as a failed breakout, now we have a failed breakout. We have an attempt to go lower. We're at the low of the current week. This is Monday. This is Tuesday. They attempted to go outside of Monday's range, and then that has now failed. So big key takeaways: solid body close, 15-minute chart, outside of a range, not a pen, which is what this is showing over here. We have a pen to the low. We don't want that. We want solid bodies of candles coming down below previous day's levels. That is triggering breakouts into the market. Higher time frame traders, other time frame traders. It is triggering those people into the market, and then the breakout has now failed, coming back inside of the previous day's range. We have now defined objectively a failed breakout. But we're not quite done. We need to understand what happens when day 3 falls on an inside day. It's very important information as well, because this is a very commonly asked question, and I'm constantly being like, people mess up the cycle a lot when they see this. Day 3 falls on an inside day. It's going to repeat the following day. So this is a great example over here. We have a breakout at the high of the current week, Tuesday, Wednesday, Thursday. They attempt to go higher and the breakout fails, giving us our day 1 3-day cycle. On Friday, they go vertical up through the high, giving us day 2 of the 3-day cycle. And then notice after day 2 comes day 3, we get day 3, but day 3 just trades completely on the inside of the high and the low of the previous day. Well, what I'm going to do is I am now going to repeat day 3 on the following day and look for the associated setups that can come from a day 3 at the high or the low of the current week, based off of structure and actual trading setups. And in the next video, we're going to be identifying exactly what setups are associated with the 3-day cycle, how to trade them, how to find entries, the different kinds of templates that are associated with the 3-day cycle, and exactly what to look for within those setups.